All right, guys. December has been a tough month. Several days have started out high and ended up lower, and the whole Santa Claus rally so far has not happened. Now, granted, there's still a couple more days left in the year. Santa Claus rally is typically considered the day before or after Christmas, before Christmas to the end of the year. Either way, hasn't been great. Now, there's some things that I want you guys to remember. Valuations we talk about are always going to drive stocks in the long run. Right, Mo?
Yeah, absolutely.
And valuations are still heavy.
And they're driving stocks right now.
Yes. So if you look at valuations now, as of yesterday, we're at 60.1% overpriced going back to 1929. And that's bad. You know how bad that is? The dot-com crash is considered the most overpriced market. Here's the dot-com's peak, 57.1%. That was the peak of the dot-com overvaluation. We're at 60.1 after falling 20% in the S&P. After falling, NASDAQ's down over 30%, and we still have a long way to go. You look at the euphoria in the markets of the last few years, especially after COVID, you just saw a complete skyrocket. Guys, at the end of the day, if you're new to the channel, you're going to hear me saying this all the time. Every investment is the present value of all future cash flow. What does that mean? Hopefully you're asking. If I were to offer you $1 per year for the rest of your life, and you wanted to make 10% a year on that money, there's a present value that all the way at 10%, that's the price you should pay. If you want 15%, the price is going to be lower because the more return you want, the lower you have to pay, and vice versa. So even though cash flow is growing, if you pay too much for that growth, you're still overpaying. You can have the best story in the world, as was seen as evidence with Tesla. Tesla's down 75% since its peak just 13 and a half months ago. Why? The story was too good. Eventually, there's capitulation. Eventually, people stop buying Tesla because everybody who wants Tesla owns Tesla.
Yeah, exactly.
And the same will happen on the downside. Everybody who wants to sell a stock will eventually stop because everybody who wants to sell is finally out. And then the things can start happening again. Yeah. The difference is, Mo and I have invested in Baba and Meta. Mm-hmm. And they fell hard, and we started buying them after they fell. We're still down on our investments.
Yeah, absolutely.
On Meta, I'm down 40%. On Baba, I'm down it's rebounded quite a bit. So I think I'm down 35% or so. But the difference is we started buying at a reasonable valuation. Tesla's not there yet. The market is not there yet. I'm comfortable investing in the market when it's within 10 to 20% of its value. It's still 60% overvalued, which is a lot lower than it was last year of 104%.
But it still has a long way to go. Now, just because something falls, I'm going to call it in half, whatever, doesn't mean it's a good play.
That is correct. Yes. And GDP rising a ton because of inflation will help that number go down. But the easiest way for the number to go down is stocks falling. Now, in December, the S&P, here's a chart for the last 3 months in the S&P. It's up over the last 3 months. But in December, the SPY started at 408. It's currently at 379. So it's down a chunk. In the last 1 month, it's down 4.19% from a little bit into November. What was November 28th? Is that the day Ohio State lost to Michigan?
No,
it wasn't. It was the weekend after.
Yeah, that was Monday.
So I'm sitting here and I look at the NASDAQ now. Look at the NASDAQ, guys. Now remember, the NASDAQ has the most overvalued companies right now. I think I did the math, and currently the top 100 NASDAQ price to free cash flow is about 27 or 28, which is still high. But keep in mind also, Amazon is in there. In the last 12 months, Amazon has lost $25 billion in free cash flow. So the last 1 month for QQQ, for NASDAQ 100, is 7.5% drop. And since the beginning of this month, it's almost 10%. Wow. Actually, it is over 10%.
That's significant.
Yeah.
For a month.
Yeah, 10%. That's a big drop, guys. Now, Mo, let me ask you a little trivia question. Somebody asked this in our community. Okay. So we have our community, guys, and we have thousands of people in here. Somebody just asked me the question, Paul, on your stock market to GDP ratio, what percentage of the time, he basically was asking what percentage of the time are stocks overvalued versus undervalued. We have 372 quarters going back to 1929.
Okay.
How many were overvalued? Or what percentage? Tell me what percentage you think were overvalued. Considering a real typical bell curve should be 50%.
It should be 50%.
Yes, correct.
I'm going to say 60% overvalued, 40% undervalued.
So Mo is saying that in the last 372 quarters, going back to 1929, 60% of the time he thinks stocks are overvalued.
I would not be surprised to see this be 50% though.
45%.
Really?
So if you look right here, I have the data here to the left. 166 quarters.
Wow.
And guess what? Of those 166 quarters, 39 have been the most recent ones.
Wow.
39 of the last 166. 39 of those 166 were the most recent 39.
Wow.
So guys, that's a lot of times that the market, but the good news is most times the market's undervalued according to this metric.
Right.
That's a good opportunity for you. It's not like you're like, a lot of people say, well, when's the market going to be undervalued? Well, we just have a recency bias. We've seen 39 quarters. That's 10 years.
It's a long time.
That's 10 years of overvaluation. Guys, it's got to swing the other way.
Yeah.
Just like in the 70s and 80s when we had 10 or 15 years of undervaluation and then we had a huge boom, same thing's got to happen.
Yeah.
So,
and it's funny, one of the biggest surprises that I've seen in the past month, maybe 6 weeks, is that these stocks, and we talked about it today, they just keep falling and there's no rebound happening yet.
That's the interesting part.
That's the thing that I'm just like, what
so
is
look
going
at Tesla.
on
Mo,
here?
let's talk about Tesla because that's exactly what we have to do.
This is the big thing for me that I looked at Tesla and I was like, how is this not rebounding yet? I actually bailed on my short because I was like,
I built this short at 135 because I thought, I was like, this thing is oversold.
Like 100% this thing's bouncing.
And it's at 110.
126 was my number. And I was like, this is going to bounce off 126 and go back up. Here we are, 110. Hit it low 109, something change yesterday.
And look at that. Look at those stochastics. What are you at?
Oh, I mean, what does that say? 7? It's just, so what this is saying is this turned into a downward trend back here in October, and it just has gotten to this bottom, and it just goes sideways. And when stochastics go sideways like this, what happens to stock price? Just keeps dropping.
So Mo, based on a long-term chart, would you have been shorting back then in October?
You absolutely could have, and you probably would have grabbed it either here in October 14th if you're aggressive, or you could have grabbed it over here in November 7th. Those are my two entries.
Okay, so November 7th.
November 7th.
So November 7th, what was the price there? What's the low price there?
So the low is 196.66. Call it, you got it at 197.50.
Call it 196.
196.
And when are you exiting? Have you had any indication?
I'm not exiting yet.
So that's the thing.
No chance.
So here's the thing, guys.
No chance.
That's the thing about shorting. It looks really good right now, but if there's a rebound here, it's probably not going to tell you to exit until the red goes above the yellow.
Right, until this red starts creeping this way. Yellow, it's going to be purple, starts creeping up this way towards this sweet spot area. And what are we looking for? It to turn into a positive trend.
And then you exit the short then. So in all likelihood, for that to happen, the stock's probably going to rebound to 130, 140. So you'll still make money on that short.
Yeah.
And that's what we're talking about here. There's multiple ways to skin a cat. You can make money in multiple different ways. But if you're a long-term investor and you want to invest, you've got to be ready to be patient. The last 39 quarters have been overvalued. And guess what? That's why you shouldn't time the market. The mistake I made was exiting the market too soon, saying back in 2017, 18, there's no way it can go this much more. I started selling in 16, was completely out in 17, 18. I was like, oh my gosh, this is crazy. Okay. Now, I'm waiting for better times. Will those times happen? Absolutely. Because remember, that's what statistics are. You can't have an average and always be above the average. That literally cannot happen.
Yeah, and that's the pendulum.
Unless you believe that it's different this time and this is a new normal and we're just going to have 60% overvalued forever.
And it's funny, that was the main talking point all through 2021. It's different this time.
And that's when you know you're at a bubble peak. It's different this time. When there's no rational... To me, the two major poster children for this bubble will be Bitcoin and Tesla.
Yeah.
Those will be the big ones for me. Bitcoin and Tesla. Now, there's a bunch of others. You know, basically, look at anything in the ARK portfolio. That was the poster. ARK itself was the poster child for this bubble. Cathie Wood was the poster child for this bubble. And I do believe that. But Bitcoin and Tesla were the real drivers of, to me, what said, like, this is what sparked it off.
So this is an interesting thing I saw this morning. It was car companies that are down this year the most. And if you look from Fisker and below, they're all EVs. So that was the disruption that was happening. Now, everybody got hit, including Ferrari. They were down 18%. They were the biggest winner of the year. But there's no coincidence that all of the EVs are the bottom.
I didn't even heard of Canoe.
Canoe is, they're one of those companies that will take your deposit and never give you a car.
Oh, sick.
Yeah. So it's pretty cool. But there's a reason for this. What is it? What are they? They're not disruptive anymore? Come
Guys,
on.
to us, it means one thing: overvaluation euphoria.
Yeah.
And when you have overvaluation euphoria coupled, eventually the fat woman sings, the fat lady sings, and it finally sang. You know, upstairs in my office, my brother would come in my office and say, Paul, is this ever going to end? I'm like, yeah. He's like, how can you be so calm about it? Because I'm like, I know it's going to end eventually. I know, but guess what? My brother is 8 years younger than me. He didn't experience .com at all. He didn't experience really 07, 08. He just has not seen a time when that was real. So even Mo, you know, and it's funny because I won't exactly say what it is, but I've seen Mo start to say things about certain investments going, okay, like eventually he'll realize like, okay, that's maybe not going to be the case. You know, my views have shifted on investing over the last 15 or 20 years. And as time goes on, it evolves. Do I keep my fundamentals the same?
Yeah.
100% I do. 100% I do. I always keep my fundamentals the same, but the way in which I look at those fundamentals might shift. Yeah. I might value something more than another thing.
Right.
I do believe Tesla will sell at a level that's going to become very attractive for investors. Yes. The question we have to ask ourselves is Tesla going to become like one of the other automakers with just bloated costs
That's the big thing. Is it just going to become another automaker after all the dust settles?
However,
because that's a lot of dust.
Look at Ferrari. Ferrari gross margin is 50%, and bottom line margin is like 18 to 20%. Who has that? No other car company has that. Now, the difference with Ferrari is they're selling 10 to 13,000 vehicles a year, and they want to stay there. And their average price in their vehicles last year, Mo just looked it up,
$322,000.
Was $322,000. You know, and to me, I love the fact that Ferrari's saying, listen, we're going to keep it super exclusive, really high margin. Yeah, we could probably, Ferrari tomorrow could triple their sales, tomorrow.
Easily.
But they'd rather be the company that says, no, we want everybody, we want there to be a wait list for our cars.
I would love to see their wait list, see how long the wait list is.
So I don't know if it's a wait list. I think it's more like a, how many Ferraris you have? Are you known? It's funny. I'm a watch guy. And this recent market got the watch business to go like in a hizzy. Like, okay, you're only getting watches if you've bought a lot of nice watches and the dealer and the jewelry store knows you. I love that. I absolutely love that. For me, my bias is, yeah, don't go sell to some idiot off the street some rare watch when I've bought 5 watches from you, you know, at full price.
Yeah.
And I want to, I mean, to me, Rolex, if you got 10 years ago, if you wanted a Rolex, apart from it being like a super, super rare one, you're getting 20% off for pretty much everybody. That doesn't exist anymore. And I love that.
It's cost.
That's what I like. It's a Ferrari thing. It's like, listen, here it is. Do you want it? No? Okay, fine. We'll go sell it to somebody else.
Yeah.
Next.
They literally go down the list and just keep going.
Yeah. They'll literally be like, do you want this watch? No, I'm kidding. Give it to somebody else. And the respect that I have about it is I'm not going to go flip that watch to make a few bucks. Right. And I think the same with Ferrari. If they know you're going to be a flipper, they're going to be like, we're not selling you the car.
Blacklist you.
Yeah, you're not going to be selling the car. And that's what I like. So the question you have to ask yourself is Tesla willing to do that? Well, not if it wants to become, as Elon says, the most valuable company in the world, not car company. He said recently, I still think our goal of being the most valuable company in the world is still there.
Aggressive.
You can't be that way being super exclusive. It's just not possible. Look at Louis Vuitton. Their CEO is the richest man in the world right now, but the company's not the most valuable.
Nope.
They do a good job, though, I think, of having exclusivity in a lot of their brands. So yeah, guys, the markets, we don't know what's going to happen in 2023. It is very interesting to me that everybody surveyed by Barron's thinks the year is going to be up. I don't know what's going to happen. It's a crapshoot. All I know is over the next few years, it's not going to be a nice ride for people who want stocks to go up. But if you're a real investor, and you want stocks to be cheaper so you can buy more shares, you're going to love the next few years. Just be ready. I don't know what's going to happen. I don't know to what level, but the bottom line is I do believe you'll have better buying opportunities in the next few years than you have today. So guys, if you like what I'm saying and it makes sense to you, subscribe to the channel. If it kind of makes sense to you, but you don't really know, if you understand exactly, that's fine. That's the best part. Something is triggered inside you to say, hey, wait a second, that does make sense. Subscribe to the channel, watch more videos, because the more you learn, the less you'll fear. Thank you very much.